It's your boy Money Buddha, the hottest day trader. Did you see the last video, nigga? I'm about to have to go get a job. I lost all my money playing around with these shit bags. Hanes brand. I thought it was a legitimate buy, bro. I lost a lot of fucking money, bro. They put me in the poorhouse with this trade. So now I'm fucking Saturday morning. I'm in a fresh new mood. Lost all my fucking money. Fucking with Hanes brand. And it missed by 5 cents. Missed by 5 fucking cents. Uh-oh, earnings is November 9th. Oh my God. I fucking levered in all early. I was late. I was early. See, I'm always like a week early, bro. I be straight losing money. I need to get this shit a week. I literally need to make all my trades on Friday. If I make all my trades on Friday with the, you know what I mean, with this week's understanding, I wouldn't make any money. But yeah, man, Money Buddha is back. I hope you all like this one. I know I ain't give y'all some stocks in a while. I done fucking lost all my money. Maybe that's my fault. That was my problem. I stopped giving y'all the fucking stock news and fucked around and stopped having news my damn self. Fucked around, started playing around with these whores. These dirty horse stock and gave me HIV. Now I got HIV in my account. My account fucking, I done fucking blown my goddamn account up, bro. I really didn't blow my account up. It's really an emergency. I know I'm in good spirits right now, but I wasn't. I wasn't earlier. But we gonna figure it out. We gonna listen to this fucking earnings call if they'll let us. So this ended up being a really epic 1-minute pullback following a break of VWAP. Don't mind me. You know my name now. I got in, I got out. I got in, I got out. That's give me a stock user. Took the trade and held, for the whole move. Sure, but in this case, it went to a high of 1150, and then it dropped to 1075. That's a 75-cent pullback. These are my dummy names. All my dummy names that I use from my
Good day, and thank you for standing by. Welcome to the second quarter 2022 Hanes Brands earnings conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you'll need to press star 11 on your telephone. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, T.C. Robillard, VP of Investor Relations. Please go ahead.
Good day, everyone, and welcome to the Hanes Brands quarterly investor conference call and webcast. We are pleased to be here today to provide an update on our progress after the second quarter of 2022. Hopefully everyone has had a chance to review the news release we issued earlier today. The news release, updated FAQ document, and the replay of this call can be found in the investor section of our Hanes.com website. On the call today, we may make forward-looking statements either in our prepared remarks or in the associated question and answer session. These statements are based on current expectations or beliefs and are subject to certain risks and uncertainties that may cause actual results to differ materially. These risks include those related to the impact of the COVID-19 pandemic and measures taken by governmental or regulatory authorities to combat the pandemic, as well as current macroeconomic conditions, consumer demand, the inflationary environment, and cybersecurity, including risks regarding the ransomware attack announced May 31st. These risks also include those detailed in our various filings with the SEC, which may be found on our website as well as in our news releases. The company does not undertake to update or revise any forward-looking statements, which speak only to the time at which they are made. Unless otherwise noted, today's references to our consolidated financial results and guidance exclude all restructuring and other action-related charges and speak to continuing operations. Additional information, including a reconciliation of these and other non-GAAP performance measures to GAAP, can be found in today's news release. With me on the call today are Steve Bratspies, our Chief Executive Officer, and Michael Dastugue, our Chief Financial Officer. For today's call, Steve and Michael will provide some brief remarks, and then we'll open it up to your questions. I'll now turn the call over to Steve.
Thank you, TC. Good morning, everyone, and welcome. Despite Q2 being a disappointing quarter, I want to thank our committed HanesBrands associates around the world for everything they're achieving in this difficult operating environment. We continue to work toward and make progress against transforming HanesBrands into a consumer-centric growth company. For today's call, I'd like to touch briefly on the quarter, including the unexpected cyber event and external factors that negatively impacted our performance. Next, I'll discuss our outlook for the rest of the year before providing an update on our full potential growth strategy. Then I'll turn the call over to Michael to provide greater detail. As you've heard through this earnings season, the global operating environment deteriorated in the second quarter. Inflation continued to impact product costs and increasingly weighed on consumer demand. COVID remains a headwind in parts of Asia, and inventory has built up in pockets at retail, all of which drove softer than expected point-of-sale trends in the quarter. Adding to these macro headwinds was the unexpected impact from the previously disclosed cyber event, which disrupted our global operations in late May. As a result, our second quarter performance was below our expectations. While profit margins were in line with our forecast, sales and profits were below our guidance. And we ended the quarter with more inventory than planned, which is creating a near-term drag on cash flow. That said, our team did a great job recovering from the cyber event, which temporarily shut down parts of our global supply chain network and limited our ability to fulfill customer orders for nearly 3 weeks. And despite the disruption, we shipped all of our innerwear back-to-school commitments on time and in full. Absent the cyber event, we estimate second quarter sales would have still been below our guidance. However, operating profit and earnings per share would have been at the high end of our guidance range. To be clear, we're not satisfied with our performance in the quarter. That said, as an organization, we're not standing still. We remain nimble, we're continuing to execute our long-term growth strategy, and we're staying focused on controlling the things that we can control. To that, we have plans in place to bring our inventory levels down. We're confident in the quality of our inventory given the vast majority is replenishment innerwear products. And we expect to end the year with inventory units below prior year. We continue to invest in our brands globally as well as our technology and our talent. We have a solid track record of managing SG&A and will remain disciplined in managing expenses without sacrificing investments in our full potential plan. And we'll continue to search for additional cost savings opportunities. Looking at the back half of the year, we reduced our sales and profit outlook to reflect the changes in FX rates, the short-term costs associated with our inventory reduction actions, as well as an assumption that slow consumer demand continues and the retail environment remains challenging. While our estimated reduction may prove to be conservative, we felt it was prudent given the softer than expected point-of-sales trends in the second quarter and the overall macro environment. That said, we're convinced we have the right long-term strategy. We're hearing it from our consumers, our suppliers, and our retail partners, and we remain steadfast in executing our full potential plan. We're acting more like a global operating company. We're beginning to move with speed, and we're seeing evidence of this around the globe in our innerwear, Champion, and supply chain initiatives. Touching on each of these, I like how we've consolidated design globally in innerwear. We're starting to see results with new innerwear products and innovation, and we're driving retail space gains. I'm very pleased with how our total support pouch with X-Temp is performing, both in the U.S. and Australia. This is the first time we've launched innovation globally and supported it with a global marketing campaign. Our retro rib product from Australia was launched in the United States under the Hanes brand and is exceeding our expectations. Our top customers are very pleased with the consumer response, and we expect to gain additional retail space. We're also building innovation platforms around absorbency. We believe this is a meaningful opportunity under our Hanes and Bonds brands, with lots of different usage occasions ranging from adult and child absorbency to post-pregnancy needs for women. And this is just the start. Our product and innovation pipeline is full. We have a lot of big ideas across our Basics and Intimates brands that we expect to drive continued retail space gains. I look forward to sharing more of our innovation pipeline toward the end of this year and into 2023. Turning to our Champion business. We continue to invest in the brand globally. As we highlighted at our Investor Day last year, Champion is a big part of our Full Potential plan. We see significant growth opportunities through the expansion of our women's and kids businesses, the expansion in new markets such as China, as well as into adjacent product categories, including footwear. Specifically, footwear in North America represents an expanded opportunity. We purchased the Champion trademark for footwear in North America in the quarter. This purchase adds to the control we have over the Champion brand and product globally. It will give us greater speed to market and the ability to have a more integrated and collaborative approach with our apparel offerings. I saw this opportunity firsthand in May as I traveled and spent time with the Champion Europe team. They have amazing head-to-toe product that comes to life in a great retail shopping experience. I came away from the trip excited about our European operations, and I saw significant opportunities to leverage our global capabilities for the Champion brand. We can build on our footwear success in Europe and Asia to address the U.S. market. And more broadly, we have a big opportunity to coordinate design, product development, and merchandising globally. During the quarter, we also continued to invest in our Champion distribution network as we consolidate down to 2 wholesale Champion DCs. This will simplify our distribution model, create efficiencies, lower costs, and improve retail service, as well as support the future growth of Champion in the U.S. And lastly, we're in the early stages of executing our Full Potential supply chain strategies to build on our advantage position, as well as balance speed, cost, and flexibility to enable faster top-line growth and higher margins over time. These efforts involve segmenting our supply chain and the previously mentioned DC consolidation work we're doing in Champion. In addition, we also began direct shipping innerwear product from our Central American manufacturing facilities to certain wholesale customers in the U.S. This initiative leverages our scale, saves time, and reduces costs for both us and our retail partners. We're also on track to go live this month with our new West Coast DC to support our direct-to-consumer business. Plus, we began adding additional automation to several DCs. This includes the addition of robots and sortation systems, which will help improve picking and sorting speeds while also lowering costs. So in closing, the macro environment remains extremely challenging and is weighing on near-term results. But our team is focused and we're not standing still. We're executing our Full Potential growth strategy of consumer centricity, simplification, increased speed, and building digital capabilities. We're controlling the things we can control, and we're delivering innovation. We have the biggest and most robust pipeline of new products and innovation in decades. These products are rolling out. They're testing well with consumers and retailers. They're driving retail space gains, and there's a lot more coming as we head into next year. As we look forward, we're convinced our strategy positions us to deliver revenue and profit growth with consistent cash flow over the next several years. And with that, I'll turn the call over to Michael.
Thanks, Steve. As previously mentioned, we faced an unexpected cyber event and external factors that impacted our second quarter performance. And while we're not at all satisfied with our results, the near-term headwinds we're facing do not change our long-term strategy or the work we are doing to transform HanesBrands into a consumer-centric growth company. I'm encouraged by the progress we've made in implementing our Full Potential plan. In the quarter, we continue to increase investments behind our brands globally. We're rolling out new product innovation across men's and women's with a robust pipeline that extends beyond 2023. We're effectively managing SG&A costs and finding cost savings opportunities. We're continuing to find ways to leverage our global capabilities, which improves speed to market and lowers cost. The macro-related factors impacting near-term performance should settle out over time. That said, our focus remains on controlling the things we can control and executing our long-term strategy. By leaning in to our growth-related investments during challenging times, we believe we will be even better positioned to gain market share and deliver sales and profit growth over the next several years. For today's call, I'll touch on the highlights from the quarter as well as provide some thoughts on our outlook for the remainder of the year. For additional details on the quarter's results and our guidance, I'll point you to our news release and FAQ document. Overall, our second quarter results were below our expectations. This was driven by a combination of unexpected cyber event in late May and softer point-of-sales trends relative to our forecast. In total, we estimate the cyber event negatively impacted the second quarter by approximately $100 million in sales, $35 million in operating profit, and 8 cents in EPS. Absent the cyber event, we estimate sales for the quarter would still have been below our forecast. However, adjusted operating profit and EPS would have both been at the high end of our guidance range. Looking at the specifics in the quarter, net sales were $1.51 billion, a decrease of 14% as compared to last year. Adjusting for the 220 basis point headwind from foreign exchange rates, constant currency sales decreased 11% from the prior year. Although the macro headwinds are weighing on our near-term performance, sales were up 75% on a two-year stacked basis, excluding PPE. And year-to-date, sales are 8% higher than pre-pandemic levels, with growth across all businesses. For the domestic businesses, in the first half of the quarter, sales were pressured by point-of-sales trends and product availability challenges. Unfortunately, this was magnified in late May due to the cyber event. It impacted our ability to receive and ship product, while at the same time we saw consumer demand slow as the result of the highest inflation in decades. We saw these trends across both our innerwear and activewear businesses. Overall, our international businesses performed relatively better in the quarter despite the cyber event. Constant currency sales declined approximately 3% as compared to prior year, although performance varied by region. Sales in Australia and Europe declined in low single digits. In Latin America, sales were up as we overlapped COVID-related headwinds in the year-ago quarter. And in Asia, sales were essentially flat with prior year as the intermittent COVID headwinds in China were offset by growth in the rest of the region. And now turning to margins. Adjusted gross margin declined 120 basis points over prior year to 37.8%, driven by lower sales volume, input cost inflation, the incremental cost associated with the cyber event, and exchange rates. These headwinds more than offset the benefits from business mix, the first quarter price increase in innerwear, cost savings, and less air freight. With respect to SG&A, on a percent of sales basis, our adjusted SG&A expense increased 215 basis points over prior year to 27.7%. The increase was driven by the deleverage of lower sales volume as well as planned increased investments in brand marketing and technology. These more than offset cost controls and expense efficiencies from our Full Potential initiative. This resulted in an adjusted operating margin of 10.2% for the quarter. Our operating margin was in line with our forecast as the organization did a great job of managing expenses in response to the challenges we faced while maintaining brand-related investments. Turning to cash flow and the balance sheet, we ended the quarter with nearly $1 billion of total liquidity, which included approximately $250 million of cash. Cash flow from operations was a use of approximately $210 million in the quarter, driven primarily by working capital use for inventory. Inventory at the end of the second quarter was up 19% over prior year in units. On a dollar basis, inventory was up 37% due predominantly to inflation, lower second quarter sales, and the early arrival of products to the third quarter commitment. Inflation alone represented roughly half of the year-over-year increase. We're confident in the quality of the inventory as approximately 80% of the year-over-year increase is in replenishment innerwear products. That said, we did end the quarter with more inventory on hand than planned. We already have a number of initiatives underway to reduce our inventory, and we expect by year-end that our inventory units will be below last year's level. The reduction plans we have in place include temporarily reducing production shifts in our manufacturing facilities, as well as strategic actions tied to our segmented supply chain initiative. On top of those is our ongoing initiative to reduce SKUs. We have plans to further reduce SKUs by another 30%, with some of the benefit coming this year. The impact from these actions is reflected in our updated financial guidance. And now turning to guidance. Looking at the second half of the year, we reduced our sales and profit outlook to reflect the changes in FX rates, the short-term costs associated with our inventory reduction actions, as well
People
as an
are
assumption
making
that
70
slow
cents.
consumer
Think about all
demand
them fucking
continues
illegals
and the retail
trying to
environment
cross the
remains
border. That
challenging.
shit just put a lot of shit.
With respect
I
to
never
sales,
was jaded like
although
that,
we
but
expect
it
the
really
second half to
whoa,
be
getting
down
promoted.
low to
I
mid-single
was
digits
super
as
high,
compared
bro.
to a prior
When you
year,
up high, bro, I was
sales
really
are
up high.
still
I
expected
didn't
to be
realize
well
how high
above
I had made
pre-pandemic
myself.
levels.
I really changed my life and
We are
didn't realize
continuing
it.
to
And now that
invest
I gotta
in our
go back,
brands, and we are
I'm
seeing
like, oh
good
shit,
consumer
I really was
engagement.
up there.
And we're
I
launching
really
new product
was that nigga.
innovation.
I really
Touching on the
did
quarters,
this shit.
we expect better
Really
year-over-year
had perfect
sales
credit,
performance in the third
really
quarter
had
as
platinum
compared to the
cards,
fourth quarter.
golden cards.
This outlook is
Really
driven
had
by
fucking
initial
$250,000
back-to-school
vehicles
commitments
and shit.
and the
And
shipments
that's why I
of
said
our
I'll go right
initial
back to work,
Champion
nigga, if I
Fall
got
Winter
to.
product sets.
And I got an interview on Monday.
Turning to
You know
margins,
what I mean? Shit.
at the midpoint, we
Yeah,
expect
no,
gross
hold on,
margin
stop
in the
the show.
second half
I'll
to
be right
decline
back.
approximately
I'll be back when it's
350 to
summer
400
drop for the
basis
season.
points over prior
For a
year,
little quick little season,
with a
couple
larger year-over-year
and I'll
impact
be
in the
right
third
back on the
quarter
market
as
again.
compared to
You
the
know what I
fourth.
mean? Like I ain't miss a beat. It's not
This
like
is
I
driven
lost
by
my
three
entire
main
portfolio.
factors.
It's just
First,
that when you
the
fucking
impact
right
from
now,
inflation as
I've
higher
taken
input
now
costs
major
work their
I'm
way
like,
off the
I'm like
balance
Warrior
sheet
Trader.
and
I was
onto our
watching a video of
P&L.
Warrior Trader.
This
I've
is
taken now
unchanged
major
from our prior
catastrophic
outlook.
margin calls like back
Second,
to back.
the deleverage
I think
impact
I've had
related
like
to
5
lower
margin
sales.
calls because I'm just going
And
too
third,
hard, bro.
the incremental
I'm trying
costs
to
related to
become
our
a
actions
trillionaire
to
like
reduce
shit. You know
inventory
what I
by
mean? And it's
year-end.
just I'm just pushing. It's like a scientist, nigga.
Looking
like
at our outlook for
Frankenstein, nigga.
operating
It
margins,
didn't. I
at
needed
the
that big
midpoint, we
storm
expect second
to
half
get enough
operating margins to
kilojoules
be
to
down
wake up my
slightly more than
monster.
400
And what
basis
happened every
points as
time when I
compared to
didn't have
last
enough
year.
power? It
The
damn near
incremental
broke my
pressure
laboratory.
relative to our prior
Every
outlook is
goddamn
a
time I
function
try to
of the
bring this thing
deleverage
online, so that's
from
what I'm
lower
doing.
gross
So I
profit
gotta
dollars
take a
as
break.
we remain
I
committed
gotta
to
rebuild.
investing in
I'm
our
like
brands and
Tesla right now.
technology.
Edison then stole
We
all my
expect
patents
greater
and shit.
year-over-year
I ain't got
impact
no
in
more money.
the third
I
quarter
gotta
as
go
compared
back
to the
home.
fourth.
I'm sorry. I got to.
And lastly, we
So I
expect
gotta
to
go
generate
back to
approximately
my roots,
$400 million
which is
in
being a
cash
slave,
flow
nigga.
from operations
I hate
in
to
the
say it,
second
but
half,
nigga, I gotta
which
do.
is more
I
than
gotta do what
sufficient
black
to
people
support
do
our
best.
full
You say
potential
black people
investments
don't work,
and our
but
dividend.
actually black people are the best workers you
For
ever
the full
see.
year,
And
we
that's what a
expect
nigga
cash
gotta
flow
do.
from
I got to go
operations
back to
to be
work.
essentially break
I
even.
hate to say it.
The
But I
change
got to go
relative to
back.
our prior
I
outlook is due to the
mean,
lower
and I'll
profit
go back
outlook
right quick.
and the working
That's what's
capital
wrong with you
impact
niggas. You niggas
from
like
the
the Mexicans
higher
see,
than planned
Mexicans think they the
inventory
only niggas
dollars.
working. The Mexicans working because
So in
black
closing,
people on
I'll
strike.
echo Steve's
But
comment.
before it was Mexicans,
The
nigga,
global
this
operating
whole
environment
country was made
remains
off of black
challenging,
labor,
and
nigga.
it's weighing on
Black
our
people
near-term
are labor.
financial
You can't
results.
spell labor
But the
without black.
organization is not standing
You
still.
know what I mean?
Our
You
team
ate
is
it, baby.
focused.
It
We are
tastes good.
executing
You
our
want
full
some more?
potential growth
You still
strategy.
hungry.
We're
Goddamn,
controlling
baby.
the things we can control, and we're delivering
Goddamn,
innovation
motherfuckers
with a
smack me in the
robust
mouth with
pipeline
another
that
one.
extends
I'll
beyond
say that shit ain't
2023.
nothing. That was for Thursday.
As we look forward,
Where's
we're
my
convinced
Saturday
our
jump?
strategy
Need a
positions
Saturday
us to deliver
fucking meal
revenue
now.
and profit growth
Nigga
with
said that was
consistent
for
cash
Thursday.
flow over the next several years.
Look at
And
we
with that, I'll
looking
turn
around.
the call
You
over
want
to
some more,
TC.
baby? You want some more?
Thanks, Michael.
You done ate
That
him
concludes
alive?
our prepared
You ate
remarks.
his ass. Well, I guess
We'll
he
now
wasn't
begin
alive.
taking your questions and we'll
Killed him,
continue
huh?
as
You got
time
some- you
allows.
got some kind
I'll
of
turn the
sense.
call back over to the
Yeah,
operator
fucking
to
eat him
begin the
alive.
question
You
and
killed
answer
the nigga, you
session.
ate him, huh?
Operator?
You gotta kill your food to eat it, huh? Nigga be moving.
As a reminder, if you'd like to ask a question,
Anyway.
please press star 11
Man,
on your
this chart look
telephone.
good, bro. It look even
Please
better
stand by
now.
while
I
we
hate
compile
I
the
got
Q&A
fucking-
roster.
I always come in a little too early, y'all. Don't be like me. Don't be like the Money Buddha, man. I be coming in too early, man. I get excited.
Our
I'm all
first
young
question
and
comes from the line
exuberant,
of
and
Michael
then,
Benetti with Credit
damn,
Suisse.
they blow it up, and
Your
then
line
2-3
is now
days
open.
later, this shit going up.
Hey guys, thanks for
CUE, and
all the
I'm
detail
on the
here.
side
I
of
know
the
it was
fucking
a
road
tough
with
quarter to
a
get through.
blown tire 'cause
I want to
fucking
ask a
blew
little
my
bit
engine. I
about
blew my tranny.
Champion. You had a
Goddamn
very
chain, you
specific
trying to
comment
fucking
in
go
there
top
that you
speed too
delivered
quick,
all
man.
of your
I keep
innerwear
trying to go top
deliveries for
speed,
back
y'all.
to school.
Money
Does
Buddha,
that
that's why I gotta slow
imply?
down. I gotta
Can I
go get a
assume
job.
that
I'm
the
doing too much.
cyber event
I gotta go back
hit
to third gear.
Champion
I'm fucking
more
in the
than
sixth gear. I'm
the
in a
innerwear
wild pipe.
business?
I'm
I guess I'm specifically
going
looking at
crazy,
the
all kind of
Champion
shit, man. I'm
sales
losing
numbers
my
you give
mind, man.
here. This is the first
Crazy,
time
I'm
we've
losing
seen
my mind.
the revenue move below 2019 levels.
I still work on the market.
Obviously, you had a lot of things that were one-off going on in the quarter. I'm trying to think about what happened. Was there an outsized impact on Champion? And maybe some thoughts and detail to help us get confidence in building back Champion to a growth brand here as we look ahead in the model.
Sure. Good morning, Michael. Thanks for the question and thanks for joining us today. So let me kind of parse that apart, and Michael, if I miss anything, kind of jump in. In terms of thinking about the cyber incident that we had impacting Innerwear more than Activewear more than Champion, not really. I wouldn't parse it apart that way. I think it was pretty much consistent across our business and how we manage it and how it flows. When you think about Champion, obviously it's a commit business, so we brought in some of that inventory early into Q2, which is part of our current inventory issues from a quarter-over-quarter perspective right now. But we feel good about shipping that product kind of on time as it rolls out into Q3. So more disruption on one side of the business than the other side.
I'm fucking broke.
When you think about Champion, yes, it was a tough quarter. You look back, we're overlapping a huge quarter, so 96% two-year stack, which gives us some good feeling. But a couple things impacted that business. Let me walk you through kind of what we think impacted the business, and then I'll talk to you about kind of what we're doing, where we're going, and why we're very confident in the brand going forward. Beginning of the quarter, we continue to have some service challenges and still some product delay, working through that. Then we definitely had a consumer slowdown in the middle of the quarter, which caused some of the excess retail and from the retailer channels backing up a little bit. We had the cyber event that we talked about, and we're still experiencing some COVID headwinds in Asia, particularly in China, which is still working against us. So I feel, and I'm very confident, the business is much stronger today than it was pre-pandemic. That said, we got work to do. And let me talk to you a little bit about what we're doing and where we're going to take the brand over time. Because I think there's a lot of good things happening. And we're very committed to Champion being a big part, and is a big part of our full potential plan. So first of all, we have a new leadership team, and I'm really pleased with the team. And it's at the top level, and it's down through the business that I think is incredibly committed and is going to take the brand to the next level on a global basis. It's very focused on a very defined segmentation strategy for product and channel, and improving upon our execution against that going forward, which is an opportunity for us. The consumer continues to ask for the brand, and they continue to ask for more and broader assortment for us. We need to deliver that. The pipeline is building of new product ideas, and I feel better today than I did in the past about what's to come as we go forward. And we're going to continue to expand into new business opportunities. So we acquired the footwear trademark in the U.S. for Champion this quarter, which is an accretive opportunity to us, and continue to build on our capability. We already have a very robust footwear business in Europe and in Asia, so we know how to do this, and it's going to be part of the globalization strategy of the brand. We're going to continue to expand new geographies. I've said this before, you've heard me say it, we're very early in China right now. There's headwinds there right now with COVID, so we're not moving as fast as we initially had planned, but that's COVID related, nothing to do with the brand or operations behind it. And we continue to have new or incremental consumer segments. We're underdeveloped with women and kids, and we're very focused on that. So, I look at the business, and all the things that we're working on haven't changed because we had a rough quarter, and we think there's still a lot of demand for the brand, and I'm encouraged about what the opportunity is for us going forward, and it's going to be a big part of our overall execution strategy, and I think there's a ton of upside.
Okay, thanks a lot, guys. I appreciate it.
Yeah, one bloody job, mate.
Our next question comes from the line of Susan Anderson with B. Riley. Your line is now open.
One job, mate.
Hi. Can you give us an idea on how much the POS flowed into the second quarter, and then also how it's trending in third quarter? I guess I'm curious if you've seen a pickup at all with back to school and then the on-time deliveries. And then also if you could maybe talk about product costs for the back half and into 2023, and if you're seeing some easing there at all as we head into 2023, and how we should think about cotton flowing through. Thanks.
Oh my God.
Sure. Good morning, Susan, and thanks for joining us. Let me do the first part, and I'll let Mike talk about it.
What about my money, my nigga?
The consumer is, certainly still feeling pressure. Inflation is impacting consumer sentiment overall and demand. And we're seeing that globally in our U.S. business, Australia, Europe. And as I mentioned, we're still seeing some COVID pressures in Asia. And there's lots of talk about the shift of discretionary budgets between experience and things. So we definitely saw the pressure build in May and June, and it has carried into July. So you think about our second half, we're factoring in that continued slow consumer business. That said, if you think about us longer term, I like our position. Apparel obviously is a discretionary, but there's different levels of discretionary, and I think we play in a really good place there with our basics business. We've got a great brand portfolio, good innovation pipeline going. So I think we can operate in this environment very well, and I think we're positioned well to do it. When we talk about back to school for a minute, it's still early, but the consumer demand seems to be week over week improving a little bit. and we're encouraged by that. And that's across the innerwear business, across our D2C business. Tax-free weekend in 11 of the 17 states was last week, and we saw a strong response for our business. So we kind of know when consumers are buying and what the headwinds are, but we're very encouraged to see what's happened there. We have a strong program for back to school this year, with more display, more inventory on the floor than we've had in the past. So we feel good about our execution behind back to school, and we're starting to see a little bit of improvement in the consumer on a week-over-week basis, but those headwinds definitely still remain.
Yeah, I think with regard to cost, the inflation in the second half, one, you can kind of see that in our inventory number, right? As we called out that over half of our inventory increase.
I honestly thought it was Hanes ketchup.
In terms of if we're looking at cost, it's in our guidance.
When I saw it, man, I said, "Oh shit, this is the ketchup." And then it said Hanes. I said, "Oh, okay." And then I still felt confident. I said, "Those were the draws, people." I said, "Okay, well, at least they're an American company."
In terms of
that's why I keep fucking up, y'all. I keep
for this year.
Y'all listen
in some
to
cases into early next year.
I was just pointing that shit. I keep fucking believing. I'm just a dreamer.
Next year, as you can
they say I'm a dreamer, but I'm not the only one.
It's great to see cotton prices come back to a more normalized level.
Maybe one day you can join us.
We'll be looking at that as we start thinking about next year's plans and pricing, et cetera. But right now, at this point, I think we feel like we have our arms around cost.
Man, we don't.
Great, thanks so much. Good luck the rest of the year.
Counting down, man. We lost the account. I'm gonna have to start micro trading, man. I was on a big run right
Our
now,
next question comes from the line of Ike Boruchow with Wells Fargo. Your line is now open.
I was on a triple major move.
Hey guys, it's Will Gertner.
Now look at
Ike.
what I got. Now look at me. Would you look at me now?
Can you guys just touch on Walmart and Target obviously had those big announcements. Can you just maybe talk about how that impacted you in the quarter, and if you're going to see any impact from that into the back half?
Every real trader knows.
Hi, good morning, Will. So I'm not going to talk directly about Walmart, Target, any of our customers. What I would tell you is I think you're seeing a macro environment change in the second quarter, and particularly towards the middle to end of the quarter, with the inflation really hitting the consumer, and you saw an inflection point in consumer behavior. And I think that's pretty consistent across retail channels, across different manufacturers, and just consumers in general. So I think really it depends on the consumer and where does the consumer go, and how does the consumer respond to the challenging headwinds that they're facing.
A real man pulls his socks up by his pants.
Gotcha. And maybe just one more follow-up. You noted some softer than expected POS trends in innerwear. Gotcha. And maybe just one more follow-up. You noted some softer than expected POS trends in innerwear. Does that mean you guys are losing share or shelf space, and you're seeing a migration of consumers to trading down to more private label?
Yeah, so a couple of things. Let me unpack that a little bit. We're gaining shelf space, and I was very pleased with the quarter shelf space report that I got, and sitting with the team and talking about the actions that they're taking in the marketplace. A lot of that's new product that we talked about in the pre-recorded remarks. Our new product is resonating extremely well, so we're gaining incremental product, incremental shelf space, and we expect that to continue going forward as the pipeline continues to build. When you look at share, a lot of ups and downs in the business. Our share in Q2 compared to pre-pandemic, we're up 60 basis points. So I try to look at share over time. It gets a little choppy quarter to quarter, but if you draw that trend line over time, I like our share position. And the reality is, private label and innerwear is not really gaining share. So that's not where share is flowing right now. So the consumer will net that out over time, but what we're doing is we're leaning in, and we're not going to let the challenging macro headwinds slow us down. So we talked about the innovation pipeline, space gains that we just referred to. We're going to be aggressive in this time, whether that's managing our inventory, whether that's leaning in, whether it's building behind our brands. We're going to keep pushing and keep growing.
Salute me, Major.
Great, thanks. I'll pass it on.
Skytail Pagers. Razor. Catch him, slice him with the
Our next question comes from the line of Jim Duffy with Stifel. Your line is now open.
6 years old.
Thank you. Good morning. Stephen, I wanted to ask about the incremental, I believe, 30% reduction in SKUs. To be clear, is this incremental to actions already underway? Where do you see the opportunity? Can you speak to a working capital benefit, and how does that dovetail with the innovation agenda?
Hey, good morning, Jim. We're talking about that reduction in inventory. So we did 35% last year, and I set the target for the team this year for another 30%. And I think, to be honest with you, I think we may continue beyond that. We'll see how that nets out. I believe SKU reduction is obviously important for our working capital management. It helps our innovation pipeline. We talked about a lot of the new things that are coming. Fundamentally, we have to create space for that, both at the retail shelf and inside our pipeline and how we operate going forward. We have not historically been as disciplined as we need to be on SKU management, and we have a long tail that I think can be cleaned up and will help us significantly in terms of we got a lot of money on the line in terms of our operations, and continue to build that lifeline for
that's why you gotta have
for innovation, and it also improves our service levels. We talked a little bit about the beginning of the quarter. Our service levels not as good as we want them to be. They're improving already in the third quarter, and I'm encouraged by that. But service levels is a really important metric for us, and SKU management, SKU rationalization is a big enabler for us to continue to improve service levels for us to grow.
Understood. Then I had a question on margins. Susan asked a question on commodity costs, but I'm curious, as it relates to the back half of the year, is there utilization deleverage in manufacturing that we should consider as a comparison? And I'm hoping you can itemize the impact of inventory clearance on the margin outlook.
Yeah. Hey, Jim, this is Michael. Good question. Yeah, as you think about, the back half guidance, we took sales down, and we also took profit down. Some of the profit relates clearly to just bringing down the sales. Some of it is to the point you made, which is in our manufacturing, we will be underutilizing some of our fixed costs, so we're taking that to the bottom line in the back half. And so that is a meaningful number. I can't give you that number specifically, but it is something that will impact the back half profitability, but we think it's the right thing to do. So in other words, as you think about the margin coming down in the back half, it's really not about additional markdown. It's really about just not producing more inventory. As we talked about, we're planning to have less units at the end of the year than what we currently have.
We used to have 0. We're on our way to 1,000.
But
go
total
fuck
actions,
yourself.
They're probably in the neighborhood of $35 million.
We had 0.
So,
0, motherfucker.
Year,
Shouts out
right,
to all 360 of you. It's so many
year.
now we couldn't even fit you motherfuckers in the room.
Repeatable.
This is the only way we'll ever get to talk. This is your home. Embrace your home. Comment section below so you can graffiti. That's
our next question comes from the line of Jay Sole with UBS. Your line is now open.
So I can comment
Great, thank you so much. I'm just wondering if you can maybe walk us through some of the details within the innerwear business, how the women's and the men's apparel business performed versus sort of the men's business.
Good morning, Jay. So when you look at innerwear business overall, on a kind of we had a tough quarter. Definitely inflation impacting it, cyber event, all the things that we've talked about. When you break out the business, not a dramatic difference between men's and women's. They're performing pretty consistently. The innovation we're balancing is pretty consistent across the business. The space gains that I referenced earlier, pretty consistent across the business. So not a dramatic change. When you think back to challenging times in the past and how this business has performed, men's business tends to hold up better than women's business.
Come on, every
there's a lot
person
of
I see
underlying
it,
purchasing behavior that goes into that, but to date we have not seen an inflection point between men's and women.
And what is there every time I buy a stock, it
Got
goes
it, okay.
down.
Thank you so much.
That's what they all say. So you comment section below. Name if you've ever bought in a fucking stock and it actually went up.
Our next question comes from the line of Paul Kearney with Barclays. Your line is now open.
But for real,
Hi, everyone. Thanks for taking my question. I was wondering if you can comment on wholesale inventory levels and where you think retailers are in rebalancing their inventory to right size for consumer demand. And then my second question is, can you talk about your planned price increases kind of in light of those inventory levels, and are they going through as expected, and what has been the consumer response? Thanks.
Sure. In terms of retail inventory, there's pockets of inventory out there that obviously retailers have talked about their position. But I think what is important for us is, a lot of our business is replenishment business. For them, so a lot of what they're calling out is more seasonal business. We have put a slowdown into our second half, and that's part of our view because of retail headwinds. So you think about why we put the second half guidance we put out there. We talked about the consumer, and one of the things we talked about was the retail environment that's out there. So we factor that into our guide. That said, if times continue to be difficult, I like our channel position. I like our channel mix, about where we are and where we're going to go. And you asked the second question. I'm sorry, I don't remember what it is.
Just on your planned price increases, can you just comment on how those still going according to plan with your channel partners, and what has been the consumer response? Thanks.
Sure. Thank you. So pricing, we talked about we put innerwear into effect mid first quarter. That's pretty much played out the way we expected it to. In the back half of this year, and that, by the way, that's globally, around the globe, not just the U.S., and that's pretty much held true to form. And then the back half is when Champion starts to hit the market in our fall-winter assortment. Managed it through pretty well. Team did a nice job partnering with the retailers. Consumer response has basically been in the range that we would have expected it to be. And, we're continuing to manage the business and think about the consumer, think about price gaps, think about share, think about space gains that we have. All of that goes into how we think about pricing going forward. And, we're starting that step of thinking about what's next and how do we think about next year in our planning process.
Thank you. Our final question will come from Tom Nikic with Wedbush. Tom, your line is now open.
Hey, good morning, guys. Thanks for taking my question. Just from a modeling perspective, how do we think about the various the different segments in the back half? Like, how do we think about innerwear versus activewear versus international?
How do we think about that, nigga? How are we gonna make some money? Are you getting any sales? Are you selling this shit? Does anybody even want to wear this
Q3,
shit?
We've got innerwear down high single digits.
I know niggas gotta have draws. That's what I'm saying. What about the draws? I ain't heard a nigga talk about some new silky draws.
Activewear.
That's what I wanted to hear from this company.
Improving.
Oh, we got a new pair of draws. Because that's what people know Hanes brand for, the draws. I ain't hear nothing about no new draws to keep my balls from pinching or something. Like they
Give us 1 second. Let me make sure we get the right number for you.
Ultra ball huggers.
Yeah, no problem.
They laughing and shit. They having a good old time with my fucking money. Fucking crooks. This is why I'm homeless. Money Buddha. Like and subscribe. Jane, I got
Q3 is up high single digits.
Like and subscribe.
And that's partially because we're just, rebounding up in terms of the shipments and the issues that Steve talked about. And international is up low double digits on a constant currency basis, but as we called out, we have a lot of currency challenges, so we'll probably be flat on a reported basis.
Got it. Thank you.
That concludes today's question and answer session. I'd like to turn the call back to T.C. Robillard for closing remarks.
Thanks. We'd like to thank everyone for attending our call today, and we look forward to speaking with you soon. Have a great day.
This nigga got it out of there.
This concludes today's conference call. Thank you for participating. You may now disconnect.
That was a fucking scam. Oh my God. How much confidence did that make me feel? Zero. You done stole all my money. Ah, my God. Fucking Hanesbrand. Ah, we're fucked. Oh, I just want to see. Oh, I just remember something. I want to see something on that chart. Fucking shit. Well, at least where's the fuck is this plateau at? Oh, my God. 70, 90. Oh, my God. We're fucked. We're fucked. We're absolutely fucked, you all. And then these fucking clowns. Let's hear what these clowns had to say. These niggas were also a fucking, these motherfucking dirt bags. These fucking dirt bags. Look at this shit. Now they say it's a hold. It's a healthy acquiring shares, insider trading. Insider trading, acquiring shares. What with my money? While my money is at the whatever for this shit. That's what's the sucky part about all this shit. The insiders tank the price so that they can start to accumulate shares. Meanwhile, the people who already are shareholders, they just gotta suck dick. They either gotta find more money to acquire more shares, or they just gotta ride, and they gotta just ride the ride. Cause that's just how it go. Big boys, rich niggas to the front, broke bitches to the left. And that's why I'm homeless now. So I need you all. Money Buddha, like and subscribe. Find it in your heart to donate to the channel by pressing that like button, sharing it to somebody you know, and subscribing to my channel. Cause we sucking dick for crack. We done lost all the money. We done lost all the money. They talking about it's 100% upside. Target price $22. And I don't got no, but now they want to buy. Now it's a buy. So at least for you all can make some money. Money Buddha. I'm giving you all the buy. Buy Warner Brothers Discovery. I've already been fucked. So I know it can't get no more lower than this shit. So if you have 0 shares in this company, now is the perfect time to start to fucking dump all your money into this shit. Because it's got to go up from here. Meanwhile, all fucking numbnuts who already have been in the game get no reward. That's the thing. I hate this stock market. I would never do this to you all. If I own a stock, you reward your shareholders for being invested into the stock. So therefore, I would never allow my stock. If you look at Berkshire Hathaway, you look at any real stock, any real motherfuckers, they not letting that shit go down crazy or do no stupid dumb shit and piss these people off so they don't want to put their money into this shit. The rest of this shit is scamapalooza. You know what I mean? It's all a fucking scam. Money Buddha. Look at this fucking shit. Now it's a green. Now everything's green. Now it's a buy. Now you should get it. Now everybody wants it. Yeah, because y'all done obliterated it. It's bargain basement prices now. If you a multimillionaire, you a multi-billionaire, you a transnational corporation conglomerate tied to the IMF World Bank with unlimited funding. Oh yeah, of course you want to buy it now, you fucking cunts. We talking about the regular people, the backbone of this country. Nigga just trying to motherfucker acquire some motherfucking assets. You lie to the people and say these are assets. You lie to the people and say, oh, you're doing something for your 401k. And then these people get to 30-something, 40, 50, 60-something years old, and they got nothing. These niggas over here sucking dick for crack. Just like Money Buddha. Where my cup? That's why you people who hear this shit, you cynical pieces of shit, you non-worthy fucking cunts, you fucking sinners, wash your fucking soul in the blood, and like and subscribe to the fucking Money Buddha before it's too late. This is not a drill. I'm fucking broke. We got nothing. Let's look at this shit. You want to see what happened? You want to know what happened? You want to know about my Friday? You want to know what happened? You all want to work on the Wall Street? Show them what happened on Friday, Money Buddha. I don't know. Let's check it out. Oh, yeah. Look at that. Oh, yeah. Yeah. Yeah, look at that. You see that big red candle? That was my Friday. That was my Friday. This thing opened up at $13 fucking a share, bro. It done gone so low, niggas gotta adjust the goddamn. Niggas gotta adjust the perspective from the shit. Look at this shit. Look at this shit. Now look at, that's why I say now it's a buy signal. For me, I'm fucked. All these people over here, I can't even, where my cursor? All these people over here, we're all fucked. But anybody right now? Nah, look at it. Oh, now. That's all about, that's our time. Right now, not the time. Now's the time. Because look at that. Now you're super extended. You put your little buy order right here. Now this is where your line is going to be. My line is up here. Then that's what happens. All these people pile in right here in this zone. And then by the time it gets up here, these niggas like, damn, nigga, I'm up $2 in profit. I don't give a fuck about making this thing go up any further. Now you got more selling. Now you're going to end up with a double top. And then more shit. No, look at that. Already happened. Look, triple tops. Come on now. Same thing happened. Oh, I'm out. Then it went down. Then the people who it finally came up to this area, and all the people who were stuck back here was like, oh, good enough for me. Shit, it's better than zero. It's better than being this shit. And then now it's crushed. Meanwhile, you hear you just heard these meetings. You hear how they're talking in the meetings. The niggas like, everything's good over here. Gobble. Meanwhile, look at your stock. Talk about how your stock price is being obliterated. And the people who are trying to believe in your company, because that's what the association and the illusion is with this bullshit, is if I have a stock, it's the Money Buddha stock. You all put your hard-earned money into the Money Buddha stock. Your perceived notion is that I'm about to try to go somewhere. I'm not going to just be a loser. I'm not going to go smoke dope and ruin the money. That now that I finally got people who believe in my company and actually want to put their money in with my money, it's supposed to invigorate me and make me really want to produce for my shareholder. Instead, you got multi-year downtrends for these companies. Not just one company. Multi-year downtrends, bro. And these people don't come out and get mad. Where's all the CEOs of all the companies been? Oh, yeah, I forgot. They get tossed out of the 154th fucking floor of their buildings. Rest in peace, motherfucking Bed Bath & Beyond. Because I was just about to say, why don't none of the CEOs come together and band together against these clowns? And that's what happens. You try to do anything and you get killed. You get Edward Snowden, bro. You get motherfucking McAfee. The nigga McAfee, come on, man. You know, every time I get banned, they gonna fuck around and ban this shit. Watch when I get big, they gonna ban my shit because then now you got the whole world watching me talking. Come on, bro. That's why y'all need to like and subscribe while it's too late, bro. I'm a revolutionary, bro. They don't want this shit on here. Look at my views, bro. Look at all my shit, bro. I go viral every other view, bro. They don't want that. But then you go say some stupid shit. If I go make a video talking about how that boy was killed the other day, if I want to go make some stupid ass, dumb, goofy, stupid, dumb shit, talking about, oh, this is what happens when it looks like when your girl does this, or this is what, and do some stupid ass skit shit, that shit's going viral. We over here talking about real money. We talking about real assets. We talking about real productivity. We talking about really trying to get yourself out of this bind situation that they have the people in. We're talking about trying to survive Armageddon. Not falling. That's what they want. They want to enhance Armageddon. They create this pre-dystopic society where everybody has a have-not, and thus it creates all this inbred negative activity. If everybody had what they needed and they didn't create such stringent circumstances, why would I want to steal from you? People always believe that, oh, somehow there's no government. Nigga, it's going to be bad. Nigga, all of a sudden, that's what's cooking the problem, nigga. Niggas taxing everybody. You got to go to work on Monday. No wonder niggas just going for $140 fucking a fucking day. No one of them niggas is running me off the street in my BMW. They hate the rich. And then the people who control this shit, they don't want nobody new on this shit. They don't want no new money. They don't want no new money, bro. But yet they do whatever. Then they come on your TV and they say, we in it together. Come on, bitch. We not in this together. Every man for themselves. This is what you call a free-for-all. Nigga, this is a fucking free-for-all. And they damn sure treating it that way. And then come on the TV and have the nerve to say, this is some kind of fucking casino. If it's a casino, then what the fuck are you all doing then playing with my money? Yeah, it's a casino to you all. Competitors. That's who our competitors are. Disney. Why do they always pump up Disney somewhere? You can't go nowhere. You can't go 3 inches without seeing Disney somewhere. Who are these people? RCI. Never heard of these. Oh, that's Reuters. Reuters. Oh, I see, because we own CNN and Reuters is a music thing. That's what I'm saying, bro. We got a hyper potent fucking portfolio, bro. They're bashing this stock and destroying it. This thing should have went to the moon from its inception. They don't want the shit to go up. They don't want prosperity. What happens every time a stock goes up? They try to say it's a meme. It's a meme because it went up. So what is it when it goes down? They don't never got no word for that shit. You see, that's when they lick their teeth. Whenever the market, that's when you watch these little vampire ass niggas. They loving this shit. You see them? They not angry. They loving this fucking shit. It's going down. I heard it's going to go down even more. I heard 2023 is going to be a recession. They loving this shit. They loving destroying America, bro. And you people get on right on behind them and y'all right up with them and shit. Acting like y'all friends with these people. These people are not your friend. That's how I got banned on my other account. Because I said that shit. I went on like a fucking 3-page rant on how I named every damn company and was like, DynCorp and Halliburton is not your friend. MSNBC is not your friend. If Reuters ain't your friend. I mean, I want to know. They deleted my old shit. Because none of these niggas your friend. Name a company, it's not your friend. Coca-Cola is not your friend. Come on now, nigga. The Rothschilds are not your friend. Trump ain't your friend. Snowden ain't your friend. Come on, man. Y'all want some other shit, bro. What's that nigga? Jared Kushner ain't your friend. Kanye West ain't your friend. Jay-Z ain't your friend. Beyonce ain't your friend. What's that other little white bitch? Taylor Swift ain't your friend. None of them niggas your friend. Disney ain't your friend, nigga. Your local establishment is not your friend. Your mayor ain't your friend. Your sheriff ain't your fucking friend. This shit is, like I said, a free-for-all, nigga. Your friends ain't even your friend, hello? You got only yourself in this thing. If I shoot you in the face, it's only gonna be you. Come on, nigga, stop playing. They got you thinking we in this cult of personality vibe, and everybody, ooh, Chevy Chase Holdings. What is this? See, you just don't never know. How do we, who is these people? There's a company, oh, these are the major, and then they disappeared them. Chevy Chase Trust Holdings. Fun fact, but yeah, I have a deep connection with that name. I want to be all whatever. I think that has something to do with us. So they own how much of this shit? Come on. Whoa. See, they know like me. They didn't lever it in heavy. But I'm losing all my money. You see what I'm saying? See, I told you, I say that all the time. If I was a giant, I swear they must be getting somehow to get this money. I got to figure out how they're doing this shit. They are levering in further. The more it go down, the more they buy. The more it go down, the more they buy. The more it go down, the more they buy. Then when they finally let it go up, they're cajillionaires. That's what we try to do, but it's hard to do it as an individual trader. So it's wrong for them to even try to fuck with us or try to talk shit about us when these niggas can do whatever they want. They got unlimited funding. They got over $15 million worth of this shit. And I say that all the time. And then that shit gonna go up. And they just created the position yesterday. Oh, how clever, how great. At its lowest point, they came in with a fucking $1.3 million position, and this thing is set to fucking go all the way up another 10. So they gonna make 10 million. They gonna make 10 million on a 1.3 buy. Cause the thing going up from here, I told y'all, it's at its lowest jump. I told you I better go buy it. Go buy it. So they done stepped in. The big boys step in. Little guys like me get fucking annihilated just like they want. And then as they come back up, they whoosh us around, spin me in my fucking seat as this bitch shoot back up. And then I don't know what to do. And I'm like, should I sell it? Oh, now it's finally up. Should I hold it? Then you sell it. And then this thing goes on a multi-year run. And then you look at it. And then you got what we call over here caterpillaritis. Because now this bitch ain't going back down. You thinking, well, I sell right now, it's going to go down like it always did. No. These things are only going down at this point because they all are stepping in. All the fat cats are stepping in and buying this shit up at its utmost disparate point. While they coming on TV and telling you all it's about to be more recession. That's them pushing it down further, getting the price down lower, basically pushing everything on sale. How much is a Ferrari? Would you want a Ferrari for $2? Would you get one if you could? That's what they're doing, bro. They don't want to buy Ferrari prices for no Ferrari. And they can control the price, nigga. They can slam it down. You see a house, oh man, that house too expensive. Slam the price down. So that means they start putting bums in the neighborhood and shit. They start dilapidating the area. They do that in the real world. They dilapidate the area and leave the area dilapidated for long term, i.e. Baltimore. So right now, Baltimore is a good buy. That's why every now and then I say it kind of is, because it's at its utmost. Every other house is destroyed. Everything is empty. So now, like I said, but you got to do it right. You got to come in like they did with $15 million so you can sweep up that entire little area and turn it into Baltimoreville. That's what they doing. And that's what they, come on, man. It's nice. I always say it'd be nice. It'd be nice. I try to do it. That's what I just had. I had me a nice little sizable quantity, and then the market maker dragged the price down. So, It's hard to tell. It's hard to say. You got to be in the game. You got to be in it to win it. Because I'm taking a step away from the game, and the amount of money is nothing. So you might as well, it's worth them margin calling you for the rest of your life just to be able to have the opportunity to smell the vapors of this shit. Because the vapors alone are more than anything you'll ever make in your whole life. And it's crazy. And people have been, and you got people working for years at these salaries, at these prices. I'm like, the fuck, nigga? I don't even know how I'm going to make it a couple days doing this shit. Niggas making this shit, and this is their life. I'm like, goddamn. No wonder y'all are disgruntled. Like I said, no wonder nobody trying to show no love. But that's not, and that's the same. Who's doing that shit? Who not letting the prosperity through? Who controlling the spigot? Come on now. Creating this motherfucking art, what they call artificial scarcity, nigga. So that they can create this Mad Max vibe, nigga. Put the like when you go to these concerts, put the bathroom all the way to the corner. Put the water all the way away from the soda. And then make you get thirsty. And make you buy the expensive soda instead of give you water. Come on, man. Who's doing that? Come on, man. Like Joe Biden. Come on, man. Joe Biden voice. And punch this shit down. Fuck my money up. Hate this shit. But it's all right. You got to stay in it. They ain't get all the shares. That's what I always tell myself. That's what you got to tell yourself. They ain't get all of them. I'm still got a little piece of this shit. But not nearly what I should have got. Because I was levered in good like them. They need to let it move quickly like that, but they don't. Because only they can now prosper from this shit. Like I'm saying. Only they can afford to now hold intraday millions of shares. You try to hold million shares intraday and they're going to fucking smack this shit out your dumb ass. They can do it though because they got the money. They got the account to facilitate the shit. I'm trying to tell y'all, man. Oh, what's that? That look kind of good. Well, they'll tell you some stocks that, ooh, now that's what we need. See, God is good right there. Oh, but then they're going to try to sell it to a nigga. They're going to sell it to a nigga. That would have been nice. Look how what we needed is, I'm about to say, look how they blocked out what a nigga needed. Oh, yeah. See, this is what a nigga need. Now, this might save the account. See, you need you a little stock list of all these little penny bangers that niggas are going to go run to. And that's what they doing right here. This is, you get to read one. It's like basically like prostitution. These little prostitutes. This the whatever. What would you call this shit? The classifieds. So now these are little ones because look at how much you can multiply your money. Like this one right here, 33 cents a share, and it's letting you know we on the move a little bit. Wink, wink. So now, boom, you buy and dump all in. See, that's my problem, but that's what you got to do. Then look at the price target. Oh yeah, $42 a share. You're gonna quadruple, you know what I mean, septuple your money. Yeah, I mean, and we already at 39. Oh yeah, come on, see. That's how you make some money, y'all. Buy this stock. I wish I could. I'm fucked up right now bad. I wish I could because think about your money. Where's my fucking calculator? You gonna buy 33,000 shares for $3 grand. I don't even need the calculator. I'm getting good at this shit. You gonna buy 33,000. You gonna get $33,000 for $3 grand, nigga. You ain't getting that nowhere else in the world, my G. Everybody put all your money. If you see this channel and you watching me, put all your money in Progenity, PROG at 33 cents a share. Right now, that's my goddamn word. I wish I could do it with you. Of course, always, I can never participate in the greatest thing that I always do. But I'm doing it for you all. Money fucking Buddha. Taught her how to buy. Maybe the Lord will bless me another kind of way. But you all gonna get blessed with this one. That's a blessing. I wish I could participate. I wish I could. That's a buy. Damn, that's a good. I ain't even know this, man. No wonder I got this shit stuck on my tab. This is a good little motherfucking buy, man. They some good buys out here. That was a great buy right there. See, they don't even give me the same vibe. This one's the vibe. I can feel it. I'm psychic. This one's giving me the vibe. That's the vibe. That's the one that's gonna go big. Hold on, y'all. Fuck. get that? We got there from market data? Yeah. Let's see who's hitting the highs. I'm still streaming. Yeah, let's calm down. I'm just reading about this new stock, seeing a new prospect. Oh, this is a buy. Ooh, price target $30. See what I mean? Damn, man, I gotta. It's all right. It's all right. There's always Monday. Now that's the one thing about trading, y'all. Trading actually makes you make you yearn for the weekday. It's the only job I've ever felt. I guarantee this other job is gonna make me hate the weekdays. But trading is the only thing I've ever so far felt where I was like, fuck the weekend, nigga. I need Monday to come back. Monday where the money at. You see what I mean? That's trading. That's the thing. You're not gonna get that nowhere. It's a shame I gotta go and take a summer job right quick. I'm still gonna be trading hard throughout this whole process. See, because I might quit halfway through that bitch if I can get my shit back online. But in the meantime, in between time, you got to do what you got to do. Because price targets don't pay bills. Labor do. Hard labor do. But that would be nice, though. It's a buy, though. I might throw some shares this way. That's my problem. I might have to just start to build my little portfolio all small, unfortunately. I didn't try it hard. I'm just gonna have to have me like 3 shares of shit until it finally. What's up with the sector performance? Do they show me sectors though? Oh, the market not on. That's probably why it ain't showing up. Yeah. Oh, see? Whoa! Now these people are really good. These might be a new little tool. Because notice how, because it was no market, so it was dead. So you had to go 7-day because there would be no data code. Market's not fucking open. See, I knew that. Did you know that? You had to know that to know that. Or that's why, because there's no market. So the market is shit. Oils is going good. Can I actually go over here? Will they let me pull up? Because that's what I always want. Yes! I always wanted something that can do this for me. Now I can see who's really popping. Now I can see, let's see, crude oil, petroleum gas, they fucking up. Fang, Oxy, these people. And then the brighter the green, the more popping. Like, these are the best people on the market for this whole market. ConocoPhillips. And then Hayes Core. Who's these people? I might buy these here. See how they price? That's why they got them big boy prices. Cause they motherfucking up there, man. They the ones. It's got a downside though. It's losing money. That's cause they didn't hit their little peak. They trying to bring down oil now. We missed the run on the oil. We looking for shit red. If Hess is, yeah, I don't know what Hess is. Hess Corporation is a product company that explores and develops, produces and purchases and transports shell crude, sells crude, natural gas liquids. NLG Natural Gas Company operates 2 segments of exploration production in the midstream and conducts the production of operation primarily in the United States and what's that, Guyana? Malaysia, Thailand. Joint development area, Malaysian exploration activities typically offshore in Guyana. Yeah, Guyana. U.S. Gulf, Mexico, offshore. What's that? Suriname. And Canada. Suriname. shows. I ain't never really been out the country. I need to start. There's a whole big world out here. The fuck is this place? Suriname in Canada. I have to look them up. Let me see. That's why we got phones though. I never heard of that place ever. Suriname. Am I saying that's because I ain't saying that right? That's because I ain't saying that right. Suriname. It's a country in South America. Can you say it out loud? It's near Uruguay. What is it famous for? Gold and oil, timber, natural resources such as bauxite and timber, gold and oil. The revenues from the mining sector, this is the mine, contribute largely to the economy of the country. It's a gold, oil, and all that shit. That's why. That's why they said this is oil. This is where they getting that shit from. They fucking taking that shit. Damn. Oh damn! Somebody sold. Haynes COO sells $7 million of the stock. Damn, they taking profits. That means you supposed to. Oh, but you know that's good. That means you supposed to go short. That's how you know when to go short. You supposed to go short against these niggas. This the big short.
This the big short.
Yeah, because now you know that the people, they getting out, so you know that's. Yeah, you know they finna fucking fuck the money up now or make it go down. See, and that's where the real money. And I know they wetting their lips with this one. Them short people, they love this to crush, cause that's like $100 back down for them. They can go all the way back and take this bitch back to $80. Meanwhile, the idiot people gonna be thinking to buy this shit. Talking about it's healthy. Selling shares. Insider traders are selling shares. $10 million sold last quarter. They out. Because they're going to reestablish their position down back at the bottom.
Yeah, they starting to, when it's all low, then they go and buy some more.
Yeah, like we just seen with our shit. And then our stupid asses, they're fucking stuck in the limbo. Being shareholder holders. See, yeah, it's gone. They out. Look at that bitch. That bitch super extended. Oh, yeah, it's gone. And now what you're supposed to do is start to establish your short position. Red line, red line, red line, red line, red line. And then it's going to, and now you get all of that. You're going to get all this side of the mountain. Remember I told you, it's two sides of the mountain, just like this. It went up, and then went down. Then right here, it was a good place to buy. And then niggas rolled it all the way back up. And now we too high, which is what they call overbought. And now we got to go back down to correction territory, which at least would be down here at $23. So that's $20 move. $20 move right there on the short. But then look what you got to play though. You got to pay times $140. But see, that's why you say this the big boy. This where the big boys live. That's what I'm saying. They don't want us to have a little place where we can eat. QQQ's going up. Black Friday deals. Black Friday deals go anywhere. Apple Watch. So now they trying to pump Apple. See, that's how they take these little articles and then they pump a stock. Because now you got an article going. I kind of like this website though. I did save it. I see one.
Market Beat?
Yeah.
Yeah, I like Market Beat.
You been on here before?
Yeah, I have accounts though.
You do?
Yeah, I have. They send me every day. They send me an email.
Damn, I ain't know that. I also fuck with some quant.
That's why I know all the stuff that's happening with AIM all the time. Because AIM's on my list, my watch list.
No, I see. They keep trying to get me to log in. I ain't logged in. I ain't know what they was doing. I like these people though. Oh, they have a little thing they do where they talk. Meta. They talking about Meta. Krispy Kreme. See, damn dog. They the one. Oh, buy Krispy Kreme. Buy Krispy Kreme. Yes, it's a buy. I had them a long time ago. They got a multi-billion-dollar deal or something. They had. I want me to see the chart. Is it the time that it finally bottom out? Because everything's been bottoming. Now's the time to buy. Yep. Then we missed it. October was the time. October was the bottom. Now it's already coming out. But you still good time to buy because now we got confirmation. Still a good time to buy because we still got. But see, you gotta be careful with these damn stocks. because now we kind of are up there. You see it already went down, and then if it don't hold right here, it's going to break down. Because this shit now, look, this line ain't beating that line. And now it's going to be a rejection. So the mind would think to buy, but I didn't learn my lesson. This thing going to go back down. Watch. It's gonna, if we go, you later on, we going to watch, it's not going to go up. I didn't learn the market maker. They're not going to let it go up. It's a trap. Because look at all this heavy resistance. It didn't even get over this line when it first ran up. It's way underneath it still. It's an illusion. That's why people sold in, because it didn't beat the whatever 4060, 1460, 1472. It only went up to 1446. So it was 20 cents shy, 30 cents shy, which gave everybody the inclination to know that's not it. But see, it kind of bottomed out and hold its support. But now, in reality, when you're supposed to be really a professional trader, motherfuckers want to wait and see it break out over top of the 40, 60 cent and put an order right there. So if you were smart, you put an order right there. You put an order to buy right there, and then you put a stop right here at 1435. I don't know why I don't ever do that, but that's what you're supposed to do. And then that way, if it breaks out, then you're going to get all that money. And if it, you know what I mean, if it never does, if it does break out and fakes and then goes back down, like because the market maker does that weird shit, he might push one more leg up and drag people into this fucking empty ass territory. I've been there. Yeah, I mean, and then drag the whole price away from this area. You'd be like, wait, I thought this was where we were gonna be at. Now, no, we live down here. We really live down here. Honestly, it's a trap. We really still live down in 1878, 1287. You say, no, but Eric, look at all that's an illusion. The market maker pushed the price up to this price. This is the dead man zone. That's why this shit going down. It's a trap. Anybody buying here is a fool. And they putting out articles talking about this shit a buy. People don't like donuts that fucking much. The run has happened. This thing going back down, and it's going to come to this area. And then once it settles here, it actually shows real strength in this pattern, which is damn near February, May, then will it start to turn? That's a lot of time. Like the time horizon in your mind make you think this shit. We talking about months. This might be a whole nother year pattern. Look at it. This was May to June. You got to look at them in 3 months. This was April to November. So we talking December, January, February. Then it's going to start being, so around January, you should be trying to look to see where the fuck this bitch is at. But what you supposed to do in the interim? That's why a nigga about to go get a job. Yeah, what do you do in the meantime? If you're really going to really play it safe and not be aggressive and actually try to see if you can get the breakout and then lose all the money, because this is a double head. This is a head and shoulders. You can see it. It's materializing. There's your first shoulder. That's the head. There's the other, now the high not beating the previous high, which is now a low, and now people are gonna freak out in a second when this thing don't do what it's supposed to do, and then it's gonna be rampant selling, which then prompts the short sellers to step on in to really cause selling, and now you have compound selling, and this thing, like I say, gonna be down $13 or something, and then the shrewd buyers who already sold up here, now they say, because that's what I see them all the time, they say, I sold right here, and I'm looking for a re-entry down here, because that's where he stepped in at. He stepped down here at 12. I'm not going to buy $2 up extended when I sold them on. They want to recapture that. So it's going to go down head and shoulders. It's going to come roughly around this area, because that's where it looked like where the juice was at, and then it's going to curl back up to now break these highs and start to go on a multi-whatever for that year run. But that's going to be when? June next year. Look at March, May. Like I say, March, April, May. At the next, so that's 2 quarters from now. You got 2 quarters, because this thing going down. This shit hits all this. Look, all of that. That's hella resistance. You got nothing but resistance here, resistance there, resistance there. Unless somehow Krispy Kreme, like I'm saying, because they control the world, so you never know. You might want to start to slowly accumulate. Like I said, what they call that shit, that cost. Whatever. Now, what's that shit called? Cost something basis. What it called? You always talk about this shit. Yeah, dollars cost average, which means you're gonna buy 100 shares. Then tomorrow you're gonna buy another 100 shares, and then If you keep doing that, that's going to work, because then that slow pace will draw you out 3 months. And then by the time 3 months is over, you'll have that 5,000 shares that you want. And then that bitch going to run right up through. And then you're going to be, that's how you do it. That's really how you do it. I don't know why, as a young person or whatever, because you want to make that money quick, that's going to be 3-4 months. But that's how you do it. You dollar cost average your way into this position. And before you know it, you'll have a large position and you'll still be in the money, and you won't be so whipsawed because this bitch is going down. So the fact that you bought here, it won't matter because you only bought 100 shares. So when it do go down, you'll buy your next 100. And then, you know what I mean? Then you'll buy that whole little U. You'll buy, because there's a U. You can't see it, but it's coming. There's a U getting formed. So this thing going to bow. It's going to bow out. And then it's going to bow back up to create that next little maneuver. Because we got to create enough energy to break through this area. Which means they got to, because the move just happened. It's very young. The young move has happened, and we've already met our first level of rejection. Which means we got to get rejected. We got to go back down and show some healthy pullback, as they say. And the head and shoulders has already been formed. It's already, because this mark didn't go higher. If it was going to continue, it would have continued, and it would have been up here a little bit. But it didn't, because they don't want it. And if you actually look at, you're like, well, let's see what it is. If I can get it. For 1453, and you are 1431. See, that's 20-something cents. That's a big threshold to be out of the money, away from that line. So that means even if it come up 20 cents, it's going to kiss that shit. Ain't going up. So it's going to cool over. Which means, what's the chances of it more likely going up 20 cents to break the high, or now go down another $2? What you think it's going to go down? It's going down at least $1.50. Because it's more money that direct. Because the market always got to go through the path of least resistance. And it's more resistance to crush through 3 months worth of fucking resistance than to just let it go down a little bit and reconsolidate and see if we can entice more people down at the 13s and the 12s. Because the real money came in at the 11s, 12, 11 right here. That's the bottom. But I don't think it's going to do that, because that's your two double bottom right here. These look like two boobies. That was your double bottom right there. It went, and then it came back and tested, and that's why you saw it broke out from that area, because it had now showed that it wasn't going to go down no more. And so people said, okay, how much? Then another micro double bottom was turned into a reverse head and shoulders, which then you see it kept, it's making little hoops to keep, and now you see it's hitting this top. It's then, and now this is the top, which means now it's going to flip an inverse and go, and now make hoops the other way. And now it's going to, until it finally does the same thing again, until it gets probably roughly around this area, and now the selling is done, and now that it's going to start to then inverse again and do this same kind of pattern like it did right here, up in this area, which will be a good thing, because it'll be higher lows, as they call it, because that was the low. Now this will be the low. Next time this will be the low. You see what I mean? That's how it goes up, and that's just lame. It's very lame that that's the case, but that's the case. This for my subs, because a lot of people, they keep saying they want to be. Don't be like me, because me, I'm buying. I'm all in right here, because I want that breakout, because I see that good, and it should be that way, but they don't want it to be. I've learned my lesson. It's gonna curl over. It might go up a little bit more and make this the double top. It go and then it's gonna be two. It's gonna have two distinct, and then that's the bump, and it's gonna curl over. So it's gonna make another, and it's gonna have a double top, and it's gonna have a double top based off that area, and it's gonna fall over. And I don't think it's gonna get crushed though. As I say, I think it is on a new uptrend, which means look to be a buyer in this area in the 1347s. You know what I mean? Maybe grab a little bit when it retests this 1384. Like I said, that's that dollar cost averaging. You want to be buying this whole little area until it finally is going to hit this area around in the 12s, maybe a little higher, and it's going to curl up again. And that's going to be and now it's going to, and now you ride up the hill. The way the thing they showed though is you just keep dollar cost averaging throughout the entire process. So I guess you keep doing it until you feel like you've accumulated enough shares for your position. But from what I've seen, there's got to be an optimal. So there's an optimal zone to acquire the shares. So if you continue to buy out of the optimal zone, it's not beneficial to you. So that's how I would feel. So like right here, this was optimal. Being in the bottom of the bowl is more optimal than being at the edge of the bowl. If you know what I mean? And so that's how I would feel. So buying up here isn't optimal. It's suboptimal. So look to be a buyer back down in this area. And that's going to take some time, which means why are we even on this stock? If you got to wait 3-4 months to be a buyer, we'll see you in 3 months. That's why I like this thing that I didn't know. I've never seen those person actually give you a good sector performer. Because now a nigga can actually look at the 30-day and really see you want to buy the beaten up shit. So that means actually you want to buy some Tesla. Unfortunately, and I hate this stock. Because you want disparity in the market. You buy low and sell high. You don't buy high and sell low. See, that's why I say healthy. Look, everything says upsides, because they know that's where the money gonna be. Look at the chart. See what the chart tell you. Yep. See, look, now we in the bottom. Perfect. Now we bottoms here in June, bottoms in July, bottomed in October, and now we're right back here again in November in the twos, which means now it might try to force the issue and maybe go a little further, but I don't think too much. So like to the 201s, it might try to kiss and try to fuck people's heads up and go 197. But that's what I'm saying. You buying that through that entire thing, because this thing is gonna now either you see it does a lot of sharp recovery, so it doesn't bowl up like most stocks. So when it hits its bottom, it's a sharp signal for buyers to step in, and the buyers step in sharply. So that means it's safe to actually go in hard on a stock at this position, because you know it's turning around quite swiftly. If you're wrong, you'll know you're wrong, and I believe you're right. So Tesla is a buy. I hate to say it, because look at it. That's a good, nice bottoms. Already did that thing like we were talking about where it rolled over. It's already rolled over because we buy low. We don't buy high. We've already got the Z. I'm gonna call that the new lightning. Lucifer's lightning. That's my new, because that's what it did on my other chart. You get that perfect lightning formation, zoop, 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 and that's when and now we know it's a perfect time to buy. This is the buy point, which means then you put your line. Now you see that line that just came, that would be a green line. That's your entry point. Now when the stock goes away, you're gonna make a killing, because now your line is down there and it's up there. Nigga, really need to start taking my own advice. That's actually a great buy. Tesla is a great buy right now. That is perfect. Multiple signals, multiple buy signals, multiple lows. Like I said, maybe it'll kiss a little lower, because like this one, see what this one kissed to. See 206, we at 290. Yeah, so $2. Let's say it might kiss you. It might, but that's a big move. That's especially if you levering in super hard. That's why they tell you don't do that shit. But I keep doing it. So go slowly over through the next week. Buy 100 shares or whatever until you get to 1,000 shares, if you can, even though you probably can't. So which means you can only afford $200. That's one share. That's why I don't fuck with these big, stupid, dumb, expensive stocks. What the fuck I'm gonna do with one share, $200 a share? If I buy 200 shares, that's gonna be what, $20,000? Yeah, see. Yeah, so that's nuts. And then 2,000 shares is gonna be 200,000. So come on. Or 1,000 shares. So, come on. But it's a good buy. I might start doing that though, because even though these are super big boys, this is where the action's at. I kind of push myself away from these big ass stocks. But shit, nigga, I might just grab 200 shares for $20K on low margin, because the margin is gonna be great. I'm sure there's like no margin on this shit. I mean, or no requirement for the margin, because it's such a big stock. But then I don't know, maybe they might hurt you because it's Tesla and it's so volatile. You know, they do that weird shit. They don't want you to be, they don't want the little guy to play. Nice big red.
If you buy 100 shares, so it's at $20,000.
Yeah, I think so. Yeah, probably 200 times 100. gonna make. That's the thing. But it start to really do like it's supposed to do. It starts to become like it makes sense. That's why I just said I might have to check it out because even though you got 100 shares or whatever it's gonna be, it's not gonna. Remember, you don't have to. It's the margin. You don't have to own the 20,000. Probably only have to have $5,000. If less than that, a third. Yeah. Oh, okay. I mean, so you only got to have $5K. You're gonna pump up $5K collateral for 200, and now you get to hold it indefinitely, which is key. Right. And now you can ride this entire move, and then you got 200 shares, and then they go up $5. It's Tesla. And you know it's gonna go up $5, so you actually gonna make $1,000. See, I don't know, man. Tesla's starting to look a little. I've been thinking about that for a while. These big stocks.
Good stock.
Mm-hmm.
And you know they like it.
Yep, and you know you got a lot. Look, that thing there's a $10.
Yeah.
Hell yeah, man. We have to check that. I'm about to go bring that into the laboratory y'all later. And check that. Bring that when I'm going to the main account and see how that adds up. Cause that might be cause I need a job. I need to do this. I can't fucking. I'm out here. Where my cup at? I'm hurting, Money Buddha. Well, you all, this is where we're going to leave you all at. I'll let you all ponder this Tesla chart as I will. And just like that, the Money Buddha strikes again.